Okay. All happy. Did you? I just need one thing. I need my laptop. Would you mind running it through? Thank you. Thank you. Okay. So, 29. Yeah. We're nearly ready to go. It's a bit chilly today, isn't it?
It's very nippy out there.
Our first day of. Okay. Let me just hear again quickly, Sean. Just
Sure.
like,
Is that clear?
absolutely perfect.
Is that fine?
Fantastic.
Good.
And me too.
And you too. All
Me
good.
too.
Thank you. Okay, so stand by. We're going to go off to. We're going off to FMR now. So I'm going to leave. Let me just take them all down. Okay, just putting everybody down. We're off to Fine Music Radio now, and they pick it up in about 30 seconds.
Stand by. Business Power Hour starts in 25 seconds. 15 seconds. 10 seconds.
The BizNews Power Hour.
Welcome to the BizNews Power Hour, where we give you the rational perspective on business news that matters. Indeed, we do, and a very special show for you tonight. We're going to be talking to the three entrepreneurs who I think, without much of a debate, have been, in the last 10 years, have built a business that has done better than pretty much any other financial services entrepreneurs. It's the 10th anniversary today of BrightRock. BrightRock went into an area of the market that was dominated by the big players, and yet managed to carve out a very strong position in a very short period of time. Our guest co-host tonight, Stephen Nathan, knows all about BrightRock, having been in the financial services business himself. And in fact, when you started 10X, it would have been around the same time, Stephen, that BrightRock began.
Yeah, a little bit sooner. We started in 2008, just in time for the global financial crisis.
Okay, so at least the timing of our guest today was slightly better. From left to right, ladies first, Suzanne Stevens, who's the Deputy CEO. Really good to have you here, Suzanne. We've worked together in a different life as well when you were at Discovery. In fact, you were all three at Discovery, weren't you?
That's right. We were.
So now people don't leave Discovery.
Well, some people start their own businesses, so.
And that was, I mean, it's interesting because if you think about it, Discovery is this business that has done incredibly well. The three of you were there. You were all in senior positions, and I've often wondered, and I haven't asked you, why not just go with a train? Why go off and do something yourself?
Well, I think, certainly from my perspective, I think that drive to start your own business and to be an entrepreneur in your own right was overwhelming. And certainly at some point you take your 10,000 hours and you apply them in a space that you can call and carve out as your own.
Schalk Malan, you're the CEO of BrightRock. Who initiated this decision to go on your own? You know, people start businesses usually when they're in a position of some stress, not in a position of huge achievement as you guys were before. Who convinced who of the three of you to do this?
Yeah, look, I think there would be different answers to that question. Depends on who you ask. Now, I'm kidding. I think, Alec, that's one of the beautiful parts of, I think, our story is that everybody was at the top of their game where they were, sitting in this room, and also even other people who joined us. So, and that was a good place to actually start from, because it was a wealth of experience. But there's also that desire, as Suzanne says, to see, can we do it? But also, for me, more importantly, it was that we believed fundamentally that the products that were currently sold in the South African life insurance industry had some significant room for improvement. And what's the beauty about what we were thinking wasn't necessarily something that I think never was thought about. It was actually so obvious, but technology wasn't really enabling that, and the way of delivering that in the hands of the advisor, and that wasn't there. And you know, we had many discussions over many years. Actually, didn't come with an aha moment. So to answer your question, in a long-winded way, but what we did realize was what we wanted to achieve would have had to take a complete rethink of the infrastructure, the technology, the way that it's delivered in the client's hands, the way that it manifests in the client, the end client, not just the advisor's hands. And I think that just made it such an obvious step to actually, you've got to start new. You've got to start rethinking every single component. And that's what we did. Every single aspect of our business was rethought. Every single word in the policy document. And I think that what really makes the story so absolutely fantastic.
Do you like, Suzanne, do you like that BrightRock banner in the background? See, it's our new studio now. It's our own studio. We can do what we like.
I like your decor.
Well, anyway, it's to be here, to be talking to you guys is pretty special for us as well, given that BizNews has been a partner of yours, Sean Hanlon, from when you started. But I'm going to throw something at you. Disruptors, and you are disruptors. BrightRock is a disruptor. Disruptors have a challenge of getting distribution before incumbents get innovation. Now that's a credo in Silicon Valley, not that well heard in South Africa, but I'm sure being the man who gets the distribution right for BrightRock in many ways, they can come with the marketing and they can come with the products, but you got to get that right. And how do you do that in a market like South Africa's, where you've got such big giants who have got such a hold over the distribution channels?
Yeah, it's funny enough. I mean, it's like the eternal debate between actuaries and salespeople. What comes first? Is it the product, was the distribution? And obviously it's a combination. But I mean, you absolutely spot on. If you don't get out there and tack your colors to a mast and fundamentally get in front of clients, in front of brokers, and nothing happens until someone sells something. So, for us, it was a massive challenge. You speak about our pasts. We really cut our teeth in some fabulous companies in this country. And without that, I certainly could not have done this, because the challenge here was not just about a fundamentally different approach to protecting a family's balance sheet. In essence, that's what life assurance is. But it was changing the way people were selling it, as Schalk alluded to. So that coupled with the challenge of who's BrightRock, you sound like a diamond mine, and will you be here a year from now?
Where does the name come from?
I'll hand you over to the marketing head for that.
To the master or the mistress of that. Where does the name come from?
Well, I mean, we spent quite a bit of time thinking through what we'd be looking for in a name. So we had established the criteria before we could find a name, and there were a couple of things we were looking for. I mean, we wanted it to carry meaning. We felt that something that was in English was probably preferable, so that it was, the spoken business language of South Africa. And then very importantly, Alec, we wanted it to be something that you didn't have to spell if you heard it. It was something that you could find on the internet. We were very conscious of finding a name and a brand that worked in a technically online, digitally enabled world. And yeah, so there were a couple of things, and then, quite frankly, you have to see what's available, because part of when you think it through, there are quite a few of your ideas that you think are genius, and then when you go and look at other geniuses also thought of those names.
Well, Stephen, you had a pretty cool name, 10X. I'm sure you'd say, well, you took BrightRock because 10X was taken.
Yes, well, 10X, just the very quick story with 10X is Andy Grove. He actually passed away a couple of years ago. He was a driving force behind Intel for many, many years. And he wrote a fantastic book called Only the Paranoid Survive. And he talks about the disruptive forces in an industry. And he goes beyond sort of the traditional competitive threats. And he says that it's a new entrant that fundamentally changes the business rules and either delivers the same product at a much better price or a better product at the same price. And he calls that a 10x event because it's 10 times harder for the incumbents to compete. I thought when we were starting 10x, obviously I'm biased, but I thought we had a better product at a lower price, and that was the 10x event.
Is there a 10x event with BrightRock, Schalk?
Yeah, I think looking back 10 years, I mean, if you just look at our market share now, Alec, I mean, we touching into that 15% in the independent broker market, which I think was hugely disruptive, as you say, in a industry that was quite concretized. You know, it was very solid.
I like that word, concretized.
And
I mean, you are an actuary, aren't you? So you think about these. It's a
In
cool word,
concrete
isn't it?
forms,
Yeah.
yes.
No.
and if you look at our product, Alec, I mean, Sean alluded to it. It is a product that tries to achieve a client's needs, protecting their balance sheet in a fundamentally different way of utilizing technology, stripping out waste, and getting our clients. I mean, we've seen our clients, Stephen, I mean, you could relate to this, seeing for the same premium, getting up to double the cover for the same, exactly the need that they then specified from the start. And not just protecting it up front, but also over time able to adapt and change. And that has been very disruptive. And notwithstanding the fact that, as Sean says, the challenge was with a new product, and it's what often the case with established markets, you got to then retrain, and you got to manage the change in terms of the sales process. And that so it comes with its challenges, and very revolutionary disruptive product does bring those challenges, which I think we as a team appreciated from day one.
Yeah, if I can just add to that, Alex, with if you look at the movements, the one thing we saw 10 years ago, especially, you know, after subprime lending and the massive shift in consumerism and this concertining of the change, the way in which people are changing the way they're buying and selling. You know, there is a logical movement all around the world to move away from a one-size-fits-all, from a commoditized space to an individualized space. And if you look at the way in which we traditionally sell life insurance, you know, we do a financial needs analysis on you, which is a theoretical exercise. Then we have to match a product, you know, to carry that risk off balance sheet, you know, that family's risk. But then it's a one-size-fits-all. So my bond and the shaping of my bond, the duration of my children, hopefully don't stay too long in my house, you know, but, you know, they all have different shapes and durations. But there was nothing that could actually match those needs. So you reverted back to price. Well, how much can you afford? There's a chunk of a life cover. And there was no relevance between the need, you know, and the cover. And the efficiency or the lack of efficiency inside those one-dimensional structures. You know, really was our call to arms. And that, in my mind, Stephen, that was our 10x event.
Yeah.
Okay, but now let's get to the second part of the Silicon Valley credo. Until the incumbents get innovation. So surely, you look at what's happened to BrightRock, 15% of the independent broker market in 10 years. That is a huge achievement in a concretized market. Thank you very much. I'm going to use that word often now, Scott. How innovative are the incumbents getting, and how difficult are you finding it to continue this growth path of yours, Sean?
I don't think they've changed fast enough, to be honest. You know, again, how much can you afford? There's a chunk of amorphous life cover. You know, what does that mean in a world where people are looking more to move? If I want to buy a commodity, I can go online. You know, but the more sophisticated my portfolio is, and this glut of information that I have as a consumer, I'm flighting to advice. So life insurance is very much about product driven. It's about squeezing advice into a product. And our view was to say, let's platform your advice through a product. And that was a fundamentally different shift. Yeah. So not only did we have to cut, you know, the first part of the journey was to who is BrightRock, and that's a new name, and you know, but we had to, as I said earlier, we had to fundamentally change the way in which life insurance products were used in the advice process, and that we've seen competitors try and look like that, but the ability of the product to fracture up and to match each need accurately is still not in place, and we are still the world's only needs matched insurer.
And you're way ahead of the game here in South Africa, which is a great story today. 10 years ago, how did you get someone to come and support you and decide that these guys were worth backing, that these guys did have an opportunity that nobody else, or were looking at it in a different way, and actually to open their wallets, because there are lots of us with ideas, not that many able to sell the ideas, Schalk. Who did you go to first? You know, there's those famous stories of Donald Gordon when he started Liberty, and he knocked on my door and I turned him away, and same thing with Anton Rupert. Oh, I could have been a billionaire if I'd only put my money into when Anton Rupert came to our farm.
Yeah.
Who did you guys approach? Who turned you down?
That's a great question. Look, we were very busy. I mean, we were actually reflecting on the last couple of days during that second half of 2010, you know, when we actively started considering, and myself working on a lot of plans and thinking, and yeah, we approached a couple of the existing incumbents, Alec. I mean, and
a couple of the existing incumbents. On this program, we don't hold back on names. Come on. It's 10 years later. They've all gone anyway. The people.
So I'll give you one, and as well. I mean, we actually approached Sanlam as well at that
back
the
then,
early days.
Wow.
And
they must be kicking themselves.
And at the time, I mean, it was just not right for both parties. I mean, it wasn't anything.
Very kind of you to say that. They must be kicking themselves because they came in later at a much higher price.
That's right. But we were and we were very clear, Alec. Also, some things that we were desirous of and needed as a group of entrepreneurs. You know, you must be able to execute. You must be able to live that dream out to its fullest. And we held onto that. And as you know, we knocked on the door of Miles Jaffet, part of the Lombard Group. You know, and they very much a short-term, known in the short-term industry, construction guarantees as an example, one of the strongest players there. And it just clicked. And I do believe the timing was perfect for BrightRock of finding that partner. You know, they're obviously well known for their venture capital. They're well known for partnerships models. You know, him coming also out of the Hollard stable, and things happened very quickly once we met him. And
did they get it from day one, or did you have to do a lot of explanation?
Look, I think the product concept, and Suzanne will also tell you, you know, was there in concept, but it wasn't developed. I mean, it was definitely not refined to the point where we've learned over the last couple of years. But we knew there was a concept. But more importantly, there was this group of like-minded, maybe, you know, people that were single-minded in their determination. And I think if you speak to Miles, that was one of the things that attracted him to this group of people. Obviously, and Suzanne touched on it, the 10,000 hours, the experience, because, you know, any technical industry is what we find ourselves, financial services. It is critical to have that experience and bring that to bear. You know, you can't assume you step out of varsity and you start a financial services business. And I think that also played a part. And I think the other thing that, and we speak about it often, and so I'll keep quiet just now. You know, the one thing that we, from day one, as a group, got together and wanted to approach very differently as a business is just that diverse thinking and valuing that diverse thinking. And we're all big proponents of that, you know. And
how do you do that, though? How do you keep an open mind when somebody, and you I know the three of you, and you're all A-type personalities with respect. So you have ideas and you have a point of view. Have you got a secret code that you say, okay, I'll stop it's your day today, Schalk, you can have it?
No, I think, Alec, and it speaks to that point that I think Miles respected, or the Lombard Group, is there's such a deep level of respect for each other's disciplines. And then, you know, we'll debate any topic. I mean, Sean will often say, you know, everybody's a sales guru, and everybody's got an opinion on various subject matters. We partners at the end of the day.
No, there's only one sales guru in our office, and that's Clive Eckstein. He's our sales guru. Outside of Clive, we do bow down, and I hope they do the same with you, Sean.
No, they haven't noticed. But when it comes to those hard decisions and the final call, we've got a deep respect of them, you know, reverting to each other, and it's more a partnership approach, Alec. And I mean, yes, we've had our debates and that, but it's never you know, we've never had a difficult crossroad to breach in terms of these discussions. So it's worked amazingly well.
Oh, business before ego.
Yeah,
That I agree with.
And I think importantly, and to Schalk's point, we do all bring a different skill set to the table. And so there's always been an appreciation that each skill set matters and that one should see every issue from a 360-degree perspective. It's a healthy thing to hear the inputs from different perspectives
Who was your
around those
first?
issues.
Who was your first hire? Who was the first person outside of the three of you that you hired, and what do they do?
So
Amanda.
I think it was Amanda
Amanda.
Spoor and then Clyde
was-
Clyde Parsons, a very close close person of following Amanda. So Amanda works in the communication space and worked very closely with me on ensuring that post this 2008 subprime lending space, we were very aware of the fact that how we craft the offering, it's critical that it engenders trust. And that your consumers can come to a financial conversation where they are empowered to have an equal conversation around their needs with an advisor, utilizing the advisor's expertise, but feeling that what's getting crafted is something that that is relevant to them and that they understand its worth. So Amanda plays a very important role in our business in enabling that. And then Clyde very much so on the product design and creation of the product.
It tells a lot about that. I remember putting that question to the guys at Investec, the five of people, the two cantors, Errol Grohman, Larry Nestat, and Stephen Kossoff, who started Investec, effectively, those five. Their first person was organizational dynamics. So they wanted someone to be able to get the staff to be engaged. And I guess that was, they were very much a people-driven business because they're bankers.
Yeah.
But it's always interesting to open up that. Stephen, who was your first hire? Would you also have gone with someone in communications or product development?
Well, our first hire, we were still in the R&D. So we spent a very long time in the R&D. We actually hired a guy by the name of Greg van der Rit. And the reason we hired him is that he said he would work for nothing. Prior to that, he had a degree. So he had a degree, and he was he'd done work, been on a ski slope somewhere in Colorado. So he joined us, and he was a gopher, and he was doing lots and lots of things, playing a really fantastic role. And he exited. He wasn't with us. He was only with us for about 2-3 years because obviously paying nothing. We didn't pay him nothing. We paid him something, but at that stage we were really scraping things together. And he went on to have a very successful retail career. But it's only a little bit later, to be honest, that we realized the importance of human capital and getting a really strong person to help us at that level. Because I must say, you mentioned bankers being good with people. Typically, they're not that good with people, and certainly investment bankers are not that good with people. So my experience, kind of the human capital function, being sort of at Deutsche Bank, it never played a meaningful role. So I wasn't exposed to that, but certainly at 10X we saw the value of people and really managing people in a professional way.
It's very interesting to talk to financial services entrepreneurs and getting Stephen's point of view. But people, how many people now do you have? Are you in charge of all the people, Suzanne? Is that
I
your
am,
portfolio?
to some extent, yes. I mean, obviously, so we have 700 people nationally.
No, serious. That's 10 years. You got 700 people. Does the government send you checks to say thank you for creating all these jobs?
Well, that is a good point. That it really is a very real responsibility. I mean, I think it's something I'm very proud of, and I know that we all share that we have been able to create employment and opportunity for families in the current environment, particularly. We're still a business that's growing, and we're still recruiting.
How fast are you growing?
So it depends on the metric. I mean, but if I look at our year-on-year growth, I mean, in terms of premium revenue, I mean, last year was obviously a very standout and unique year, but we were double digits, Alec, where the rest of the industry was shrinking by close to 15-20%. But I mean, if I look now year on year where we're growing, I mean, it's double digits plus. I mean, we're looking at 20% revenue growth year on year. So that's fantastic, and it's credit really to, I think, so many aspects. And and as Suzanne says, the team is growing. I mean, we continuously looking to expand. And
Now, you do know that we're free to air, well, we all over the world through YouTube and through businessradio.com, but we're free to air in Cape Town. So people in Cape Town know BrightRock because of the rugby.
Yeah.
Why, though, do you Varleys, I presume you are Varleys or people from upcountry, decide to go and support Western Province or the Stormers?
No, I asked that question myself.
Did you? And who's your team? Who was your team?
The Bulls.
The Bulls was your. Mind you, I see you helping them. You
We
okay?
finally got there.
You.
It took 10 years though.
I'm just joking.
But you've been why the Stormers?
Well, again, Alec, it was actually a very rational process in terms of making a choice of where to take what. I mean, Stephen will tell you as well, and you'll know. I mean, any kind of startup and entrepreneurial space, every rand really matters, and you very, very carefully think about where to invest that spend. So Western Province Rugby was at the time. The opportunity was there, so they were looking for partners, and in terms of their ability to help us leverage our marketing strategy, which was a content-led strategy, they were by far the best positioned team with very strong digital assets. They were early to understand the power of utilizing storytelling and utilizing the internet and digital platforms.
Yeah, I remember an interview that David O'Sullivan, who works for us, well, he helps us a great deal. The interview he did with Sia Kolisi, long before Sia was even captain of the team, saying this guy's just got something. And I mean, that's a dream come true if you've been associated with such an icon all the way back. So well chosen.
Yeah.
Did you see that in Sia and then decide to go with Western Province?
I can't say that, but once we got there, we recognized in Sia just an incredible leader, but also an amazing South African story and one that is absolutely inspirational. And so we were definitely party to bringing that story to South Africa at that time.
So where to from here in our last 5 minutes as we close off with the BrightRock Happy Birthday? Did you sing Happy Birthday?
Absolutely.
Did you? And
yes,
did you sing
wore
it
a party hat.
Yeah. Did you sing it like Benjamin Zander said, really from the gut, a full happy birthday, or was it just very
some of
polite?
us have better singing voices than others, so let's just leave it there.
It's a choir of 700. But where to next? What's the next mountain to climb? In 10 years' time, when we sit in this studio and we ask, looking back on the previous 10 years, the BrightRock story, how's it going to pan out?
Alec, I might start it off, and I'd love Sean and Suzanne to add to that. I mean, firstly, we've got still a lot to do in South African environment in the protection space or life insurance market. So we're very excited about those opportunities. I mean, especially if you look at the work that Sean is doing on the distribution side, growing our distribution footprint, so that's a big focus for us. I mean, we've got a massive focus just on, if you look at our product and how it's designed around adapting as a client's needs change and buying more cover, changing my cover. And we still got a lot of exciting things to do there in terms of how clients interact with us, not just day one, but day two. So those things are really great opportunities for us. And then, we've said it and we've often said it. I mean, BrightRock's ambition is to become a financial services organization within South Africa and potentially one day other markets as well. So our focus is around building out our product offering. As you know, we've got a great funeral product offering. We've got a group risk offering, now also offering it to fund pension funds as a group risk benefit, and our individual offering. So we're looking to expand and grow that offering in due course. So I think in 10 years' time, we hopefully look back and with even more excitement, because there's still a lot of room to grow.
So bolt on, if you like, it'll be new products bolted onto the existing chassis rather than going out and doing an acquisition.
Yeah, I think our philosophy dictates, and not necessarily bolt on existing chassis. But, I mean, that one don't know yet sitting here. But I mean, we very much got a very unique approach to our needs match philosophy and that. So I don't see acquisitions in our pathway. I do see us growing our product range out in due course.
Sean?
Yeah, I think this excuse me, I think this change in consumer behavior is fascinating for me personally, and for us as a business, and particularly in a stodgy, boring industry like life assurance. The truth is that it plays such a fundamental role. And when you can't protect your family's balance sheet, it's the cheapest and most effective way of doing it. But it has to change, and we need to understand that consumers are now dictating the beat. They armed, they informed like never before. That's an exciting journey, and I think we've put ourselves on that track, and I think that the whole money journey, the whole financial planning journey of clients is something that I think will play out quite actively.
Suzanne, last word from you. How many clients do you have now? How many policies do you have?
So we've got 2.8 million clients across all the products that Schalk has just
2.8 million. So 700 from 10 years ago, 700 staff, 2.8 million clients.
Yes.
So when we get to year 20.
Well, hopefully it's exponential. I mean,
Exponential.
we're not looking for doubling. That's
10x.
what I say. Yes, 10x.
10x. There we go, Stephen. It's got to be exponential. So it's not incremental.
Definitely.
It certainly hasn't been incremental this far.
No, and I think, I think maybe to echo what Sean and Schalk are saying, I think the important thing is that we've got a very clear mission, which is about enabling people to navigate big changes in their lives. And we've seen that if by delivering, both in terms of the product and in the way that we empower people in those conversations, that resonates in a world where people have information, but also want to have a real say in how the solution works for them. And we'll continue building on that platform.
A fabulous journey, and I'm so privileged that we at BizNews have been part of the road with you. We're coming up with, it'll be our 8th anniversary, so we always watch you. You 10. Can we get to 7? No, we've given up on that race, and there is no race anyway. But it's really good to be able to watch an entrepreneurial story like this just blossom and continue to blossom, and we look forward to seeing what's going to happen in the next 10 years. Stephen?
Yeah, without a doubt. And just very quickly, I remember when Discovery listed in 99, and at that stage, they were only a medical aid. And Adrian, on the roadshow to all the institutional investors, they said, well, what else are you going to do? Are you going to cross-sell? And he said, no, we're going to focus like a laser beam, which they did. But we all know today, Discovery, when you've got a great product, you've got a great brand, you've got great distribution, and clients trust you, if you can take that to the next level and build out those products, as they're saying, financial planning, the capital protection is one important piece of a much bigger picture. So I wish you guys and girls and all 700 of you all the very best for the next 10 years. Good luck.
Thank you.
Thank you.
Thank you very
Steve.
much, Steve.
Thank you very much.
And that was our business partners here from BrightRock, and we're privileged that they came into the studio, all 3 of them, Suzanne Stevens, Schalk Malan, and Sean Hanlon. Good having you here in the BizNews Power Hour, and look forward to continue watching your journey into the future. Well, it's the top of the hour now, which means that it's time for us to catch up on our news, and that is with our editor-at-large, Jackie Cameron.
South Africa's official unemployment rate rose to a new high in the first quarter as the construction and trade industries shed jobs. The jobless rate rose to 32.6% from 32.5% in the 3 months through to the end of December. This is according to Statistics South Africa. Unemployment, according to the expanded definition, which includes people who are available for work but not looking for a job, rose to 43.2% from 42.6% the previous quarter. South Africa's official unemployment rate is the 3rd highest of 82 countries tracked by Bloomberg. The World Health Organization has changed the way it names COVID-19 variants in an effort to destigmatize some countries. The major variants of concern have been renamed, with the UK variant called Alpha. South Africa's variant is now called Beta. Brazil's variant has been given the name Gamma, and the India variant is now referred to as Delta. India has another variant which has been named Kappa, while a US-specific variant is being referred to as Epsilon. The first known variant, which was identified in Wuhan, China, is not present on the list published by the World Health Organization. South African miner Sibanye-Stillwater says it will buy back up to 5% of its shares in the market, or about 10 billion rands worth of the stock. The share price rose sharply on the news. Sibanye reported a massive increase in first quarter core profit last month on the back of higher prices for metals including gold, platinum, palladium, and rhodium. In a statement, Chief Executive Neil Froneman says the board considered the repurchase as the most appropriate and value-enhancing allocation of surplus capital. Median pay reached $13.4 million for chief executives of the biggest US companies in 2020. This sets a fifth straight annual record in a year when businesses and their leaders battled a global pandemic. Most S&P 500 CEOs got raises of about 5% or more, as their companies recorded annual shareholder returns of about 8%. This is according to BizNews premium partner, The Wall Street Journal. And that was your BizNews Flash Briefing. I'm Jackie Cameron for BizNews. For more on those and the other big stories of the day, visit biznewsradio.com.
Thank you, Jackie. You're listening to the BizNews Power Hour, brought to you by the team at biznews.com. Well, as always, at this time, we catch up on the markets. And who's our sponsor? No prizes for guessing.
BrightRock believes that with every change in life comes opportunity, and the markets aren't any different. The daily movement in the markets mean change for us all, sometimes small, sometimes big. This daily market report is made just for you by BrightRock, the first ever needs-matched life insurance that changes as your life changes.
Welcome back, Justin Rowe Roberts.
Great to be back, Alec. It's felt like a lifetime.
Jeez, what you've been up to. Okay, Stephen, have you got a CFA? Are you a
Yes,
CFA?
I do.
Okay,
Yes.
So that's what Justin's been up to. And how tough is that to write a CFA and work?
It's very tough. It's very tough. It really is tough. I did mine in, giving my age away here, 1990. I think I started in 94 or 3 or 4, one of those years. And it's really tough. But the great thing about a CFA, and certainly from my point of view, because I studied a CA, which is very general, and I didn't really want to be an accountant or an auditor. But when you're doing a CA, it's all about financial markets. It's all about economics, financial markets, and everything to do with financial markets. So for someone like Justin, that's very interested in financial markets, it's an incredibly focused degree, but it's a very hard degree, and now it's a global degree. So you're competing with the brightest and smartest young minds all around the world, and I think they grade these on a bell curve. So it's a great challenge. You learn a lot, and it's a great achievement. So well done, Justin, so far.
Well, that sounds a little bit rough. So you're taking on everybody else in the world on a bell curve, so you don't automatically pass. There's no 50% pass rate.
Exactly. So although I thought the exam went relatively well, I thought I won the collision, and all these things do end up coming to small margins. So I think I've put myself in a good place. You can never be confident enough because it's a percentage of pass. They pass around 43% of candidates. So at the end of the day, it actually depends on how the other candidates felt. And if the other candidates felt more confident than me, then I'm in trouble, I guess.
Oh, Justin, we are pulling for you. Either way, I have a very good friend who failed the board exam, I think it was 5 times, and then gave it up. So it just happens, and he was very bright, and it just one thing that he couldn't get through, but he never felt confident after he came out of the exams. In your case, you're feeling good. That's it. Stephen, he's got our vote, hasn't he?
Without a doubt.
So what's happening on the markets today?
Thanks, guys. The JSE All Share Index continued its momentum, up 1.5% to 69,000. Sasol was up 6.4% to 238 Rand a share on the back of stronger oil prices. Sibanye-Stillwater was up 5% to 68 Rand a share as the miner announced a 10 billion Rand share buyback program. MTN was up 3% to 102 Rand 50 a share, and Remgro was up 3% to 123 Rand a share. In the currency markets, the Rand was flat against all the major currencies to 13 Rand 75 cents to the dollar, 19 Rand 48 to the pound, and 16 Rand 84 cents to the euro. Gold is flat at $1,900 an ounce. Brent crude is at $71 a barrel. The premier cryptocurrency is slightly lower at 500,000 Rand a Bitcoin, and the Kruger Rand will cost you 27,300. In the US markets, the Dow Jones Industrial Average is slightly higher at 34,600. The S&P 500 is flat at 4,200. and the Nasdaq is lower at 13,700.
Thanks for adding the Kruger Rand. There's a lot of people own Kruger Rands, and well, it's been a phenomenal performer. Actually, after last night's conversation, Stephen, I got an email from Peter Major, who showed the gold index, the gold ETF, the new gold ETF, and it looks like a Ponzi scheme. I mean, it just goes up in one direction over a period of time. And that's the giveaway with a Ponzi scheme. If it goes up and there's no pullbacks, but it seems as though Kruger Rand prices or South African gold price in South African rands is a little bit of a one-way bet.
Yes, as you know, you've got two things to play there. You've got the rand, which is strong. So it's great to see Kruger Rands doing well in a strong rand, because normally we associate commodities with a weak rand is when we benefit. So it's the underlying gold price that is doing really well. So that is really good to see.
Justin, I see on the Wall Street Journal, our partners over there, the headline is oil price hits 2-year high as OPEC sees more demand. So you mentioned that Sasol's had a particularly good day today.
Sasol up 6.4%. If these oil prices persist around the $70 mark and people even projecting oil to go further, Sasol's earnings per share will be around 40 to 50 Rand. So if you think that they're trading on 5 price to earnings, which is mild, they're seriously going to be earning a lot of cash if the oil spot price stays where it is today.
Isn't it interesting, Stephen, that we were able to buy Sasol in our BizNews portfolio at 28 Rand a share only a year ago?
It's unbelievable. It's unbelievable. And if you look at the oil price, when was it in COVID? Was it about April of last year where the oil price actually went negative? Do you remember that? Where
Indeed,
the forward, because of the cost of holding oil and the demand having dried up so much, people were actually, you were being paid to buy oil. And now you look at the share price, and it comes back to, as investors, you've really got to look at the long term and try and eliminate all kind of the short-term emotion and noise. Because if you're able to do that, even half decently, as a long-term investor, you can really make some fantastic, investment decisions for yourself.
Stephen, so you still remember the theory of storage from 1994? That's very impressive.
That's what it takes to get a CFA, Justin.
But what about that gold price, $1,900? It's hanging in there. Well, in fact, not hanging in there. It's sitting pretty steady.
Yes, and then to go into the conversation that you and Stephen were having earlier about the Kruger Rands, I was reading the report today. I think since 2000, 14% compounded annual return, which is very impressive. And I think if you're just invested in gold, also from 2000 in Rand terms, I think around 15%, which is great, considering that if you're earning anything between 10 and 15%, I think you're doing relatively well year on year.
That barbarous relic has actually delivered the goods. Stephen, I suppose the question now is, all these gold bugs who live in South Africa, and I think there's a little bit of gold bug in all of us because of the history of this country. Are we missing a trick by not having bought gold in the past, or is it too late to have bought it or to buy it now?
So, gold is a very difficult asset to value because, on the one hand, gold has a value because we use it in jewelry. So, it has a value, but the vast majority of gold is not used in consumption. The vast majority of gold is used in kind of stored in central bank vaults. So it's a little bit of a sentiment play. It's kind of often people will say as a store of value in a safe haven environment. So if we have a financial crisis or a coronavirus, a global pandemic, then we look for stores of value, and gold tends to do well in those environments. But if you look at the long term, and now we're talking about 50, 60, 70 years, then gold has not done well. It tends to match inflation. You've got to be a little bit careful about where your starting point in gold is, because there's quite a bit of what we call kind of starting point or end point risk. If you get the right period, it looks fantastic. But if you look over the very long term, it hasn't been a wonderful asset. So it's much more of a trading opportunity. Typically, that is what it has been. I think we're also in an environment now where globally there's so much money sloshing around the financial system. There's more money than opportunities. And I think it's sort of as well, gold is benefiting just because there's so much money. And, if you're holding cash Sometimes you're getting a negative interest rate on cash if you're holding on to it. And even if you're investing in government bonds, many government bonds, you're still getting a negative interest rate. So I would be a little bit cautious about being overly optimistic about gold. But in South Africa, just by owning the index, you tend to pick up a reasonable slug of gold just there. Whereas if you were, let's say, in the UK or the US and you just bought the index, you would get negligible gold exposure. So we do pick some up indirectly in the index, but it's not a bad idea to have a small portion of your portfolio in gold, but I certainly wouldn't. I'm personally not a very big gold bull for the long term.
And just to close off with, you mentioned Sibanye Stillwater. We had Neil Froneman here last night in our virtual studio. Share price up 4% today, I see. So a big announcement there about a share buyback.
Yeah, I guess we have to chat about that. 10 billion rand. It's a lot of money. The company's got a 200 billion market cap, so it's 5% of its shares in issue. I guess it would have been either a big dividend or the share repurchase, and they've chosen the share repurchase. Stephen, what are your thoughts? If you were a shareholder, I'm not too sure if you are, would you prefer getting that dividend in cash or do you not mind the share buybacks?
It's always a difficult one because the fact that you signal a share buyback and your share goes up 4%, it means you're trading against yourself. It means you're telling the market that you've got this natural buy of 10 billion, so it ends up costing you more. So it's certainly 4% more expensive today than it was prior to the announcement. Management is really all about capital allocation, and if you think about it, typically there's sort of three things you can do in a business. The one is you say, we have capital and we have investment opportunities that are attractive for our shareholders. So it's above our kind of cost of capital. So we're going to reinvest in our business. If you don't have those opportunities, then if you're sitting on cash in a low interest rate environment, that's going to be quite a big drag on earnings. So you don't want to be holding too much cash. Then it's a question, do you give it back to shareholders where they would be taxed with dividend tax at a 20% withholding tax, or do you buy your shares back? So it's really one of the two. But I think what you do want to see from a company, from management, is actually being proactive in capital management and not letting cash sit idle on the balance sheet. So I think that it's definitely a better option than letting it stay on the balance sheet. And then whether you get a dividend or not, that's always, you get different kind of investors who want dividends. And just, one thing to note about dividends that's quite interesting in South Africa is that pension funds are tax exempt. So the dividend for a pension fund, they don't pay the 20% withholding tax. So dividends more valuable to a pension fund than it is to an ordinary investor.
So Neil Froneman gets the thumbs up from our experts, and it was lovely having him on the program last night. He had some pretty strong words to say to government, particularly Gwede Mantashe, about the need to go green in energy and let the companies build their own plants if they are able to. That is our market report. And of course, around about just after 6 o'clock every night, Justin will be bringing us up to date with what's happening in the investment markets.
This market report was made just for you by BrightRock, the first ever needs-matched life insurance that changes as your life changes.
Indeed, it does. Well, we've had quite a BrightRock evening tonight. We're now going to be moving on to two other interesting companies. First off is Famous Brands. And Famous Brands, you might recall, made a disastrous foray into the UK in 2016. They bought a company there called Gourmet Burger Kitchen. They have now finally, in today's financial results, written off the entire 2.5 billion rand that was invested there. Gourmet Burger Kitchen is certainly has got no more relationship with Famous Brands. But I listened in on the entire presentation today, and I started getting quite excited about this company, not because of the numbers that they produced, because they've gone from a solid profit to a pretty significant loss. At the operating level, operating profit is down, it's reversed by 700 million rand in the last 12 months. So you've got the Gourmet Burger Kitchen nonsense, plus you've had COVID, which has smashed a company which is in its market. However, the second half of the financial year for Famous Brands was a massive improvement on the first half. So in other words, those 6 months from August until February were far, far better than the first 6 months. They managed to claw back a lot of those losses. One big thing now is that they're sitting on a debt-to-equity ratio of 350%. Stephen, 350% debt-to-equity, that's pretty high, isn't it?
Yes, I mean, without delving into the detail, it's almost technically insolvent. So you obviously need lots of profit to pay down your debt, and clearly they're not insolvent. So they are a cash business, and they do have very good cash generation capabilities. But the business is where it is. Obviously the acquisitions they made and financing those acquisitions with debt, it's always tricky. When you're confident and possibly overconfident as a company, you value your equity. So you say our equity is really precious. We don't want to give it away. We'd rather use debt because we can finance this in an offshore jurisdiction at much lower interest rates. And unfortunately, that's a much more risky strategy, because A, you're going offshore and you're buying into a foreign market, and B, you're financing that with debt, which is much riskier. If you finance that with equity and it goes wrong, then the shareholders take the pain, but you don't have an ongoing liability. So that's a very high debt ratio for them to resolve.
Not surprisingly, it was the more important questions that came up to Darren Healy and the Group FD level on exactly what they're going to be doing about that in the future. I've got a short clip that I cut from the report today. Let's have a listen in, and then we'll be talking with Gerrie Fourie, the Chief Executive of Capitec, about another interesting story, which is the voting down by shareholders of the implementation of the remuneration strategy at Capitec, a rare reverse from what are usually very happy bunch of people, given the returns that Capitec has made for them. But let's listen in on that famous brands investment conference today.
What is your medium-term target on debt? That is, what would be the ideal position management wants to be in terms of net debt to EBITDA?
Yeah, I'll take that, Darren. Thank you, Tumeleng. So if we first talk about the gross debt position, what we're comfortable with is around 1 billion rand to 1.5 billion rand. You'll have noticed that we closed out at 1.5 billion rand. So quite comfortable with where we are, even in the short term. In terms of the net debt to EBITDA, the first thing is to meet our financial covenants, which are disclosed in note 14 again of the long form. But where we would be comfortable is certainly below the level required for us to start getting onto the dividend story.
Okay, we have one question from Alec from BizNews.com. After GBK in Tashes, are there any more sales of brands being planned?
Alec, I think our strategy is very clear right now. So the trimming of the portfolio is probably complete. I mean, there may well be opportunistic things that come along, but I'm comfortable that the Signature Brands portfolio is something now that we can work with, and there may well be something small on the manufacturing side if things pan out, maybe not, but nothing critical in terms of the core business that is the same as it is. I mentioned the Great Bakery Company sale as an example, but no, I think the Signature Brand portfolio is in good shape now.
Thanks, Darren. The last question I'll take is from Nick at Signal AM. Looking ahead, what are your expectations on store closures? What percentage of franchisees are currently not economically sustainable?
Well, look, that's always a difficult one because we don't have access to franchisees' balance sheets, so we have a good sense of the P&L, but we're not anticipating the kind of year we've had behind us, so we think that that's fairly stable. I mean, there will always be movement in the base, so don't get me wrong. There will, particularly with relocations. What we don't know is the demographic changes post-COVID. So we never provide a projection on that, but we're not anticipating any form of surge or anything that's out of the blue or abnormal. In terms of the franchisee profitability, remember that franchisees have had relief like we've all had in business. So as much as the base has dropped, we've provided relief. Government has been helpful around UIF TERS. Landlords have been very helpful. Banks have been very helpful. Franchisees have rolled their sleeves up and worked damn hard. Labor has really lost out in this whole conversation because there's been a lot less hours put through. It has kept the cost down. So the model itself has readjusted to some degree. It's really around now the recovery and how profitable the businesses are. But on the path we're on right now, we're very optimistic.
That was Darren Healy, who's the Chief Executive of Famous Brands. And you also heard Lebo Ntla, who is the Group Financial Director of the company. We are now, Stephen, as promised, bringing in Gerrie Fourie, the Chief Executive of Capitec. And Gerrie, for a company that has been so admired and done so well for shareholders, and number one in South Africa on return to those who've invested with you, it was a surprise to see at your annual general meeting that more than 50% of your shareholders voted against the remuneration policy execution. Now, this is not, I don't know if it's ever happened in Capitec's history before. Did it come as a surprise to you?
Well, yeah, I think what is important, good evening, is important that it's not against the remuneration policy, but it's the execution. We already engaged with shareholders about 2, 3, 4 weeks beforehand, and we knew that they were unhappy. Not so much unhappy because the majority said they fully understand why we did it, but from a compliance point of view, they have to vote against. And I will explain. We have set certain targets for our bonuses as well as for our share options pre-COVID, because nobody knew about COVID in February when we did that. And then COVID happened, and we had to adjust our bonuses and options to take COVID into consideration. And what everyone has said, you can change your targets going forward, but you can't do it backwards. So we believe it was the right thing to motivate management and to motivate the staff because it benefited everyone. And I think, and the main driver of that was, I think Capitec overall did exceptionally well during the year. And I think that's the background. I think what is also important, it's within the mandate of Remco. So Remco made the decision, not management. So that's in a nutshell the background.
Stephen Nathan, who's our guest co-host tonight, has had a lot of these kind of engagements in the past, no doubt, Stephen, where you've seen or unhappiness on certain parts of what is presented at the annual general meeting, but very rarely do shareholders vote something down. Is there anything that you'd like to pose to Gerrie that perhaps can unpack it a bit more?
Yes, I think you're right, Alec. I mean, South African shareholders, institutional shareholders, I think, can be criticized, and can many others, for being too kind of passive and not for taking a stand on issues. And I'm not saying this is an issue that they should have or shouldn't have. But I think maybe just, and Gerrie touched on it, I think what's really important here, and I don't know the detail, but it's if everyone in the company is treated equally. Because if this is seen, if there's a handful of executives who seem to be getting a special treatment, and others in the company, or I think there's almost 15,000 people at Capitec are not benefiting in any other way, then that would be really unfair. So I think there's two issues here. The one issue is, internally, the messaging and the way that all employees are being treated, and whether that creates any animosity. The second issue is always a difficult one for for institutional or for shareholders in general, because you want management to be incentivized and you want all employees to be incentivized. But it's always a difficult one when something like this happens. COVID is an unforeseen event, and should people be compensated for that, or should they take that on the chin as everyone else is? That's a very difficult decision. I'm a little bit skeptical when companies say that people are going to be demotivated and they're going to lose staff to others, because others should be in the same position. And then you get in a game where everyone, it's not the lowest common denominator, it's the highest common denominator that you are tackling. But I'd be interested to know, Gerrie's, just which you did touch on, did this benefit other employees in the group? Thanks.
Yeah, Stephen, I think very important. There was two sections. There's the short-term bonus that was all staff, and then the long-term bonuses, which is options, which is for your excos and divisional exco members. The view we taken is that it's an extraordinary year with COVID. The targets that were set on both of them were not relevant given COVID, and then you need to use your judgment, and that's what Remco has done. And a very big portion of that was the fact that, you know, in the last 6 months of the year, Capitec was actually 18% stronger than the previous year's 6 months. So Capitec overall did well, and that's why they felt it was important to motivate all staff in this case.
So we now go into a more normal year, one hopes, in the year ahead. And these kind of issues, would you confidently predict, Gerrie, that shareholders are not going to vote it down again in a year's time?
Well, I don't know. It's an interesting one because, firstly, I think a lot of companies is going to struggle this year with the COVID impact, and how do you remunerate, and do you adjust, don't you adjust? Because I think we were first, or relatively first. So I think it's going to be interesting to see what happens right through with all companies given COVID, because COVID, nobody planned COVID and nobody knew how COVID is working. And it's interesting. The one criteria we've got is that you need to grow with GDP plus inflation plus 4%. Now, in COVID, it was extraordinary because you would never get to that. Everyone had negative figures. And now, the year after COVID, you will way overshoot that. So that's the interesting part of COVID. So it's got actually a 2-year effect.
It's going to be occupying minds both within boardrooms and within financial institutions on exactly how to play this, exactly as Gerrie says. A bad year from COVID, but then shooting the lights out the next year. It just shows that we live in a very complex world, and we try our best to make it less complicated for you with the help of Stephen Nathan on a Tuesday night. Our guest co-host, you will recall, Stephen is the founder of 10X. He is now an independent. I suppose, Stephen, is it gardening leave that they call it now that you're on?
I'm calling it a sabbatical.
You're calling it a sabbatical. Well, that's fantastic. We're delighted to have you for your sabbatical and thereafter, we hope. But thanks again for your contribution tonight, and thanks for being with us wherever in the world you might have been. We look forward to being back in your company again, 5:30 tomorrow. Until then, from the team here at BizNews, cheerio. You've been listening to the Power Hour, brought to you by the team at BizNews. Stephen, thank you.
Cool.
That was
Thanks,
fabulous. Yeah,
all good.
Fascinating with the BrightRock guys. You know, we had the Zim finance minister on Thursday, and we had a similar kind of half hour with him. And it's nice. You can get into a little bit more depth, a little bit more interest, and I think it worked well tonight. So thank you, and thanks for your questions.
Yeah,
and
that's great pleasure. And they're great stories. You know, you want to kind of share. Let's share uplifting stories of entrepreneurs that are doing really